Welcome back to Crypto Macro Insights. I'm Maya, and it's Tuesday, August 26th, 2025. Tom, what a difference 24 hours makes. Yesterday we talked about nervous optimism with Bitcoin consolidating around $113,400. Today I'm seeing complete panic in the community while Bitcoin has actually held up remarkably well at $109,800. What's your take on this dramatic sentiment shift?
Maya, I've never seen such a rapid psychological shift in my years of analyzing crypto markets. We've gone from yesterday's maybe this consolidation ends soon to today's full-blown capitulation narratives. I'm seeing posts like should I pay back my loan or commit Sudoku, and people getting liquidated multiple times in single nights. But here's what's fascinating. While retail sentiment has collapsed, the macro fundamentals have actually gotten even more supportive since yesterday. We have a classic contrarian setup developing.
Let's dive into that sentiment collapse. What are the most telling signs you're seeing, and is this college selling pressure real or just psychological? The shift from yesterday's growing September fear to today's complete doom scenarios like altcoins are going to get murdered in September and the bull run is over. Pack your bags, that's quite dramatic.
It's actually both real and psychological, Maya. There is a genuine seasonal component. September traditionally marks when students need funds for the new academic year, and crypto has historically been a source of liquidity for younger demographics. But what's fascinating is how this rational concern has morphed into full panic mode. The fear has become self-reinforcing. I'm seeing practical desperation, people talking about having to sell portfolios for college expenses, getting liquidated repeatedly, and this widespread feeling that everyone missed the top again. However, from a contrarian perspective, when everyone is positioned for doom, and we're seeing classic capitulation signals like mass liquidations and retail throwing in the towel, that's often when markets surprise to the upside.
Now let's talk about those macro fundamentals you mentioned becoming even more supportive. What's changed since yesterday? And can you put that $60 billion in liquidity into perspective for our listeners?
The reverse repo situation has become even more dramatic, Maya. We're now down to just $47.57 billion, which represents a staggering 62.3% decline in just 6 months. That's not just a decline. That's a complete structural collapse that has unleashed roughly $60 billion in fresh liquidity into the financial system. To put this in perspective, that's more liquidity than Bitcoin's entire global daily trading volume across all exchanges combined, for months on end. Meanwhile, the dollar index continues its descent to 120.70, down over 5% in 6 months. With real yields falling to 1.85% and the yield curve dramatically steepening, the 10-year minus 2-year spread is up 175% in 6 months. We have classic conditions for a flight to risk assets. The VIX at just 14.22 shows there's no panic in traditional markets, which means this liquidity could easily flow into crypto.
So we have this fascinating setup where sentiment is terrible but fundamentals are great. What are the key dates we need to watch that could resolve this tension? And are there any warning signs we should monitor in the meantime?
The key dates are still September 4th and 5th, Maya, just as we discussed yesterday. But now the stakes feel even higher. September 4th brings the ADP employment report, followed by the official jobs data on September 5th. Given this massive liquidity backdrop and the Fed's employment-focused mandate, weak job numbers could be the perfect catalyst for this liquidity to flood into Bitcoin. But strong numbers could quickly shift the narrative back to hawkish Fed policy and dollar strength. The dollar index at 120.70 is the key metric to watch. If it breaks below 120, especially ahead of those employment reports, that's your green light for Bitcoin strength. We're also seeing high-yield credit spreads widen to 2.95%, up about 4% in 6 months. That's not alarming yet, but credit markets often smell trouble before other markets do.
Given this setup, maximum pessimism meeting maximum liquidity support, how are you adjusting your strategy from yesterday? And what would convince you that this contrarian thesis is wrong?
I'm actually becoming more contrarian bullish, Maya, which might sound crazy given today's price action. I'm increasing my bull case probability from yesterday's 35% to 40% because this sentiment collapse feels like classic capitulation. My base case remains range trading between 106K and 118K, but now with 35% probability instead of 45%. The key trigger remains a sustained break above 115K, but now I'm looking for that dollar index break below 120 as the critical catalyst, especially if coupled with weak employment data. I'd abandon this thesis if we see the dollar index surge above 125, especially combined with surprisingly strong employment data on September 5th. In that scenario, Bitcoin could test the 95K to 100K zone fairly quickly. But right now, with 60 billion in fresh liquidity and maximum retail pessimism, the setup feels ripe for a surprise move higher. My recommendation is to be patient but prepared. Keep powder dry until September 4th to 5th. But if we get weak employment data combined with the dollar breaking below 120, that's when I'd go aggressive long with up to 60% of available capital, targeting 125K to 130K by end of September.
Tom, if you had to give our listeners one key insight from today's analysis, what would it be?
The key insight is that we're witnessing a fascinating paradox, Maya. While the community has moved from nervous optimism to full capitulation in just 24 hours, the macro backdrop has become even more supportive with this massive liquidity injection from the reverse repo collapse. When you combine maximum pessimism with optimal liquidity conditions, you often get explosive moves that catch everyone off guard. September 4th to 5th could be the moment this tension resolves, and it could surprise in either direction, but the setup increasingly favors the bulls.
Brilliant analysis as always, Tom. So to recap for our listeners, we have a dramatic sentiment shift toward full capitulation while macro conditions have become even more Bitcoin-friendly. $60 billion of fresh liquidity is sloshing around the financial system, the dollar is weakening, and everyone is positioned for September doom, a classic contrarian setup. Watch that dollar index below 120 and those employment reports on September 4th to 5th as your key triggers. As always, this is not financial advice, but the setup is certainly intriguing. We'll be back tomorrow to see how this fascinating dynamic evolves. Until then, stay contrarian and keep watching those key levels.